All right, let's get in the trenches here. We want to hit on agricultural stocks. Scott, what's interesting that I noticed in a note last week is that the pace of soybean and corn planting last week was slightly faster than expected, which could be a bearish signal. Or it could present a good buying opportunity. So before we get to the individual stocks, the sector as a whole, what are you thinking?
Well, this sector was strong about a month or 2 months ago and then started to roll over. If you take a look at MOO, which is just a good barometer of the entire group, look where this is, okay? You had a high, lower high, another lower high, cascading down. So that right now tells me that this group has been under pressure, okay? But it's coming into some decent support around 52. The question is, can it hold and go sideways and build again? Right now, I'm seeing very mixed signals there.
Yeah.
I know that traders trying to play it from the long side have been getting frustrated. I know these stocks haven't had good traction. We haven't seen new highs. We haven't seen a lot of going on in the news. It's more of buy in the whole, small if you believe in the long-term thesis here, which, you know, there's a lot of different things to look at in this group, like you just stated.
Right, and I also think that investors are getting worried that corn prices are going to fall, but they'd have to fall 30% from current levels for demand for fertilizers and for equipment to start getting hurt. I read that in a recent note over the weekend. So, you know, it has some wiggle room here, I think.
Yes. Okay.
All right, so let's get to the stocks. We want to start with the fertilizers. We want to go to CF. For the haves and have-nots, it seems like this is really the have.
Yes, this one's been stronger. This is the one that I've been hearing about on the trading floor. People have been trading, having some success.
And the investor, I've been hearing it on the investor side as well, the retail investor.
So good. So maybe there is something to this story. But for me, I want to see it break out, and it failed to break out last week. We talked about an interesting level on CF. If you take a look here, this is that level I wanted to see it get above for some type of momentum to show that some stock in this group could do it. That was at 145. It turned tail on Friday. We got to make sure that CF holds this area, which to me is about 132, and we could see more health here as it gets above 145. I'm not touching it until it gets above that area and holds.
And put it on your watch list for today because JP Morgan just upgraded it to overweight from neutral today. JP Morgan also upgraded Mosaic, MOS. What do you think of this one? Usually it's not one of the strongest in the group. The earnings were one of the weakest.
Yeah, this one's been, you know, in the bottom of the range, so they upgraded it. It'd be interesting to see for a day trade. You know, I looked at it before. It's down a little bit. If the futures go lower, it shows some relative strength. It could be something to watch today for a trade. I don't know how much, you know, I would say follow-through it's going to have, but you do see, you know, a downtrend here. It's in place. Until it breaks above, I would say this 70. It's an avoid unless you just want to buy it in the hole and then add when it gets above 70. But until it breaks that downtrend, it can continue lower. So the safe play is waiting for it to break 70. The more aggressive play is buying in the hole and looking for some cash flow based on the upgrade.
All right, now we really have to hit on Deere because, you know, Citi said in a note that higher farmer income is supportive for fertilizer demand, but that farmers are more heavily investing in land and then equipment to farm the land, which brings me to Deere. I mean, UBS raised its 2012 and 2013 earnings estimates. We got to look at the chart. We've been talking about it for a while, and I want to see if there's any good buying area here.
Well, the whole thing is when you buy a stock on the defensive and you're buying it because it's lower, it seems to always go lower. So I like to look for momentum. It's coming into big support. I've been talking about it a little bit based on this big level here. If you take a look back, you know, this is where it held the last time. This is where we're at coming into it. So, you know, this is an area to maybe do a tier one. I think we might tag this 200-day down at 82. But if you look at the highs where it was into support, this is only a tier one. So you want to buy the dip on this thing, you do one. When it starts working, it starts acting better, you get to tier two. So if you have to do something, it's tier one at best for Deere.
And I have been hearing some worries that those who needed to buy equipment have already bought. But I do want to say that UBS's channel checks revealed that 71% of dealers say they expect sales to rise year over year. That's the most positive in 7 years and the second highest in 14 years. So I think you've got to keep that on your radar too.